All right, chat. So I've been trading for over half a decade. Here's 3 beginner indicators that you can use as a beginner day trader if you're just starting to get into the markets. By the way, my name is WallGleece. I have over half a decade of experience in the financial markets, forex specifically. And here's 3 beginner indicators that you could use if you're just starting to trade. So let's get into it. So the first indicator, well, it's not necessarily an indicator per se that you could definitely use, is the Fibonacci retracement, right? And its use for the Fibonacci retracement is it measures how deep that let's just say you're in a move, right? So let's just say that you're buying or selling, whatever. The whole purpose of the Fibonacci retracement is to measure how deep the retracement will go. So if you're just looking to get into that indicator per se, right? First thing that you would need to do is you'll need to click indicators right here on TradingView. If you don't have TradingView yet, download it. Well, it's a website to find the Fibonacci retracement tool itself, right? Which is not technically an indicator, but you can use it as an indicator. Your list right here on the left on TradingView, right? You'll click Fibonacci retracement and boom, it should pop up. So let's talk about the Fibonacci retracement itself, right? So the Fibonacci retracement, it consists of multiple levels. So you might be wondering, what is the 100%, what is the 86%, the 78%, 61.8, etc., right? The purpose of it, like I mentioned prior in the video, is to measure how deep the retracement will go, right? So let's show you guys how to draw this Fibonacci retracement. So here as an example, right? You can see that we have xauusd, which stands for gold. Essentially, what I would do is I would draw my fib from the first point of the move, right, to the top of the move, right? And let's exit. Well, we could keep that, right? So now you're probably wondering, okay, cool. Where does the percentages come in? I don't really see the point in these percentages, right? So as you can see, you have 100% right here, and you have 0% right here, right? So this is the beginning of the move, this is the top of the move, the impulse, right? Now we're trying to measure how deep the retracement can go, right? So like mentioned prior, this will be the push, right, to the upside. And now as we can see, price starts to retrace or correct itself back to this 50% level, right? So as we can see, we're having some rejection at this key level right here, rejection at this level, rejection at this level as well, right? And even if we take a deeper dive into a higher time frame, let's just do like a 4-hour time frame, right? You could also continue to see these rejections, right? So the use of the Fibonacci retracement, you can base your trades off of Fibonacci retracement, right? You could possibly take buys if you're looking to take buys, right? So as we can see that price is rejecting 50% of the move essentially, right? This is definitely a key level that you possibly could entertain to get in if you're looking to get into buys, right? Now let's talk about the meaning of the percentages, right? We haven't dived into that as of yet. You have your 0%, you have your 100%, 78.6, 86.60, etc., right? So here's the point of it, right? So your 38.2%, right? Let's put this right here. So your 38.2%, right? Let's put a percent, would be your strongest. Well, if not the strongest, this will definitely be your second strongest, but this would be your strongest. This will be your strongest level, which indicates that the price action, that the trend is very strong, right? So that is the whole purpose of the 38.2 key level. It'll tell you that the trend is extremely strong, right? The second most important key level would be the 50, right? 50%. And what this would essentially indicate is that the trend is not the strongest, but it's still medium strong. Let's just say medium strong. The 68.8 level is considered the golden zone. So for golden zone, this means that it's still the strong trend, but it's essentially the price action is starting to die down a bit more. Now, if price tends to go to your 78.6, anything lower than the 68.8, anything lower than 61.8, my apologies. So that would be your 78.6, 78.6, right? The trend isn't as strong, right? So if we're day traders and we're looking to capitalize on any short-term position, so let's just say you're on a 1-hour time frame, if price is showing that it's diving deep into the 78.6 range, then that's indicating to you that the trend is not as valid as you might think it is, right? So we definitely want to dive more into the 38.2 like we mentioned earlier. So 38.2 means the trend is extremely strong, right? So let's find you guys an example of a 38.2. Draw the trend from here, boom. And as you can see, price is more so rejecting the 50% and a 38.2, right? Which indicates that the trend is still actively strong, right? So that's definitely something that you want to look forward to if you're going to use the Fibonacci retracement key level indicator. The second indicator that you guys definitely are going to need is you're going to need a rectangle. So these are more so tools, not necessarily indicators. Indicators itself, right? Indicators are delayed tools. You want to focus on the tools that you already have within your trading view to maximize your technical analysis. You don't want to worry about too much about indicators because indicators can't tell you when to place a trade. Those biases are formed based on the information that you already have. So relying solely on indicators is not what you want to do as a day trader. This will give you false, you want to say, information towards future trades, and this could essentially put you in drawdown. So you want to stay away from indicators itself. It is a delayed tool. Sticking to the tools that we already have, we already talked about the Fibonacci retracement. So now let's dive into the rectangle. So the rectangle, what is the point of the rectangle itself? And like I said, you can find the tools here. Where's the tools? You can find the tools right here. The point of the rectangle itself is pretty much how you're going to drive your zones. So pretty much your support or resistance zones, right? So let's say we're in current price action, right? What we would do with our rectangle is we can use this tool to essentially draw over our support or resistance zones, right? So as you can see right here, we have some data right here, some interactions at this key level right here. We also have some right here. Let's draw that out. Boom. The purpose of the rectangle tool, purpose of rectangle tool would be to draw zones. So this will be the purpose of your rectangle tool. So we got a rectangle tool, right? You have your resistance right here. So we could even classify this as a resistance zone, right? So not resistance zones, but price wants this as resistance, right? So we have this as a resistance, and price is also holding this key area right now as a support, right? But you're probably asking, all right, cool, support or resistance, we get it. How do we even get our support or resistance? And the way we would identify our support or resistance is with our rectangle tool. The rectangle tool is definitely something we want to use. Also, what you could use your rectangle tool for is you could also use it to map out consolidations. You can also use it to map out your consolidations, right? This is actually a consolidation. This was crazy. In my opinion, consolidation meaning in the sense of price doesn't have any clear direction. There's no trend. Price is pretty much stuck in a zone, in a box, essentially, right? So you can use that rectangle, it's a box, right? And map out your consolidations, right? So let's just say, for instance, price is in this consolidation per se, right? Which should look like it was stuck right here. Wait on a breakout, right? So once you can see a breakout, now there's more so a trend that's happening within the markets versus you being stuck in that consolidation. We talked about Fibonacci retracement. We talked about a rectangle. Another underrated tool that you would definitely need is your circle, right? So where do you find your circle? Essentially, you would go to this area right here. It says geometric shapes. Find that, and you would use eclipse, not circle. My apologies, chat. Eclipse, right? So what I use this for is to identify wicks within the markets, right? So I like to change the color, me personally. So you could put, let's use like a yellow, right? This is for touches. So you would zoom this out right here, not zoom this out, but you would zoom this right here, right? So let's say you're in current price action itself, right? Boom. So you see how we're keeping it very simple? Now we're putting it all together, right? You also can add it right here. Boom. Clips. You can add another one right here, right? Boom, right? And you can also add another one right here. So right now we're on a 1 hour time frame, right? So you would move right here, boom, and look at that. See how everything played out together? So we identified 3 different things right now, right? We have our rectangle tool, which is number 2. We have a rectangle tool for support. We have a rectangle tool for our resistance. We also have our rectangle tool for our consolidation. But now we have our eclipse tool, which is a circle. I call it a circle. We have it set for our wicks within price. See a wick right here, wick right here, wick right here. right? So you see these touches that's going on within the markets, and you could even use it right here as well. So these three tools are the main tools. You could call it tools, indicators. The other three tools you will only need if you're solely trading price action. You don't need anything else. And our Fibonacci retracement, right? Let's see our fibs. Where could we throw our fibs? We could even throw right here, honestly, right? Boom. And as you can see, like we talked about earlier, price is rejecting our 382, right? And you can see prices continue that trend as well. So we have our Fibonacci right here, which is number 1. We have our rectangle tool, which is number 2 that we utilize. And we also have our eclipse, which is a circle, which is number 3. So chat, that's a video for today. The 3 indicators that we talked about, you have a Fibonacci retracement, you have your rectangle, and you also have your eclipse tool. So these are the 3 indicators / tools that you will need, the only tools you would need to exceed your trading journey. If you guys have any questions, you can shoot me a DM on Instagram at WallGleece. Subscribe to the channel, like and subscribe. Leave a comment, let me know if this helped you guys out. And if you have any more video suggestions that you guys would love to see, drop a comment as well. If you like the video, drop a like. And yeah, guys, thank you for watching. Till next time.